Well, good morning, everybody, and welcome back to the ROS Media channel. I'm Andy Benson, and I'm sure you're all very well aware of who this gentleman is. Good to have you back with us, Ian. Today, we're going to talk a little bit more about the webinar that we ran on Saturday, 21st of March. If you've been following the content that we've been doing, what we do now is we run the webinar at the weekend, and then after the webinar, we collate all the questions together rather than keep you all for 3-4 hours at the end of the webinar trying to get through them. We run a Q&A and make sure that we cover all those questions. So the Tax Avoidance Protocol webinar that we ran on the 21st, we've had a huge number of questions that have come in from members all over the world, to be honest with you, covering recoupment, covering tax, covering trusts, covering timelines, all sorts of different subject matters. So what we've done today is we've stripped out, as we do always, any of the duplicate questions, so we can just focus on the individual questions that matter to you. You know, the person who is either a member here at the Republic of Old Souls, or if you're new to a webinar for the first time and you're curious and you've got questions, we've got them all here. But as per usual, Ian, what I want to do is start out with the problem at hand, because there's always a problem. And as you often say, for every problem, there is a solution. And that's typically why we run the webinars, to educate people on what the real solutions are to the problems that people are facing. So when it comes to this tax avoidance, maybe we could just go through that. What's the problem that people were facing or potentially are facing at the moment?
Well, the problem really is that it's based on a delusion. The delusion that you could outfox and outsmart the tax collector, HMRC, if you're in the UK. Millions of people believe that you could restructure your affairs in all manner of different ways, and HMRC would let you get away with not paying them the taxes that they want. And there was a whole industry that was evolved over many years called tax avoidance. So it wasn't tax evasion, because a lot of people get confused about the difference. You weren't like hiding all your revenue and not disclosing it. That's tax evasion. That's Lester Pickett, you know, the old jockey who was for tax evasion, right? So he just hid his revenues and thought he was going to get away with that, which of course he didn't. But tax avoidance was people who actually believed that they could put a structure together, or get somebody very highly impressively qualified to put a structure together, and use that structure to lawfully avoid paying taxes.
Right.
And then delusionally believing that that structure is going to stand the test of time, and HMRC are never going to be able to defeat it, because it's that strong that this tax avoidance benefit that they're getting when they were doing it is always going to remain there, and the HMRC are never going to come back to them in years to come and say that scheme that you did however many years ago, we've now found a way to beat it.
Right.
And by the way, you owe the taxes that you didn't pay us all those years ago, and interest and penalties on top. So what a lot of people in the tax avoidance market were selling is, even if HMRC do find a way to defeat these schemes, you'll get the benefit of the money today. So however much you would have paid HMRC, you can use that today. You can invest in things today that will appreciate in value. And even if you have to pay the taxes down the road in years to come, you'll still be ahead of the game. Well, that was one of the sales pitches, right? So you're deferring and delaying. Even if they find a way to take these taxes from you, you're going to defer and delay, and then you get to use the tax money to do things with it that will increase your wealth, so that you'll have a much bigger wealth pool later on to pay the taxes if they find a way to defeat the tax scheme. Gotcha. If they do. So what do you want? You want jam today, or do you want jam today or jam tomorrow? It's like, well, I have it today, please.
Yeah.
Yeah. So That's what the tax avoidance industry's pitch was. And then there were innocent people who didn't even know what a tax avoidance scheme was. They literally were offered a contract from their contractor, whoever they were contracting with, and the only way they could get their remuneration was to take the tax avoidance scheme on board. And that's how they got paid. And that is 60 to 80,000 people did these EBT schemes without having any choice. If they wanted the work, if they wanted the revenue from that contract, that's the only way they could receive it. It was through a loan from an EBT, which is a trust, an offshore trust, and that everybody else in the whole organization that they worked in was doing the same thing. And they were assured by the people they were contracting to that it was perfectly lawful. It was never going to be defeated by HMRC. And if it were defeated, the promoters of these schemes and the people that they were contracting to would help them, would argue on their behalf with HMRC and beat HMRC. So people just went along with it because everybody else in that organization was doing the same thing.
Yeah.
It wasn't unusual in that organization, in that environment. It wasn't unusual. So the problem is delusion. The people who actually had the ability to investigate and employed high-flying, highly qualified, very impressive tax lawyers, barristers, people like Robert Venables, who was a QC, a Queen's Counsel on taxes, who would write opinions. People like Paul Baxendale Walker, who was a tax barrister, who set up the Rangers Football Club scheme, EBT scheme, all sorts of other QCs, Queen's Counsels, who were at the top of the legal system in taxes, telling you that this scheme works because of all these reasons. So you're either at that end of the game, where you had access to those opinions, and you thought that they were robust. And even if it didn't work in the long run, you got the benefit of the cash flow. You've got the taxes that you could use and invest in things, expand your business, put the money aside, buy investment, programs, whatever you were doing with the taxes you were saving.
Yeah.
Or you were caught by the fact that you were a contractor, and the group. No option. If you wanted the work, that's how you got your remuneration, and those were the two groups. Right. And then you had, I guess there was a third group, which was the super rich, the Alex Ferguson's, David Beckham's, Robbie Williams, who were facing enormous tax liabilities, and they had bespoke kind of schemes designed for them, based on the thing, but they had a kind of bespoke individual schemes built for them.
Gotcha.
Again, they were delusional because, quite frankly, if anybody believes that HMRC are going to enable tax avoidance schemes to work, then they really have no idea of the control agenda.
Yeah.
If they actually believe that the HMRC is going to go, you know what? We've just reviewed a tax avoidance scheme. It's genius. We're never going to be able to beat it. So we're going to let it get promoted in the market, and we're never going to challenge it because we actually want people to save taxes. We actually want people to live without a big tax burden because, wouldn't that be a great world for us to live in? No, HMRC.
Nobody at HMRC.
Their job is to tax you.
Yeah.
Is to tax the birth certificate entity. That's their job. Yeah. So they're not going to not do their job, are they?
No.
And if they can find a way to get the taxes from you, they're going to find a way because that's their job. And they don't care whether you are able to afford the taxes or not. According to their map of the world, taxes have to be paid. And if you've chosen to do something else with your funds rather than pay the taxes, they're basically going to destroy you. That is the problem. So you've got delusion of those that were buying into these schemes believing that they were going to work. You've got the delusion of people believing that if it starts raining in 5-10 years time, they've got an umbrella when they didn't have one. Yeah. And then you've got the delusion and the deception of the people that thought there was no other option when they were given loans as opposed to any other way of getting remuneration, because there were other ways to be remunerated. They could have said no to the loans. They could have said, I'll just invoice. And then they could have declared every year their revenue like all other self-employed people. Yeah. And they could have discharged the taxes year by year. Yeah. But they didn't do that because they just thought it was quite a neat scheme. Everyone else is doing it, so I'll just go along with everybody else that's doing it. So, right. That to me that's the problem. There was a lot of delusion. There was a lot of false belief and misunderstandings. Yeah. And there was actually some people out there who believed, and this was the promoters, the guys that were promoting these schemes, that they were smarter than HMRC, and HMRC was never going to be able to defeat these schemes. And that's hubris. It's delusion, because that's like saying, I'm going to go and jump in that river where there's a whole load of crocodiles, and I'm going to swim from one side to the other, and none of them are going to attack me. Yeah. I don't think that's going to happen, is it?
No, no. So for anybody that's watched the webinar on Saturday, we've got a whole section of questions that have come through. We've got ones to do with just some fundamentals. So I do want to cover them all, because I would say that we've had people on the webinar on Saturday who were maybe brand new to this. And, there's terminology that no doubt would have come out to do with recoupment, and people are not used to that kind of terminology if they're brand new to this. So we do have some questions, first of all, surrounding that, Ian, in terms of recoupment and what it actually is. So let me run through these first of all, and then we can start digging into some of the others. The first question is, can you clearly explain what we are actually recouping? Is it tax? Is it credit? Or something else entirely?
Well, it's a fundamental question, and of course it's one that everybody who's doing it should have comprehension of. You can't recoup the credit itself. No. Because there is arguably, and there's different numbers out there, but if you looked at world debt, including derivatives debt, then you're looking at 400-500 trillion. So that is the credit, the world debt. Yeah. Now, if you go on the world debt block, which we did, on one of the previous interviews, it tells you there's 80 or 90 trillion, but that doesn't include the derivatives. No. Because the investment banks trade derivatives, and that's huge. So if you could recoup the credit, then you would be able to recoup $400 to $500 trillion. Yeah. So that you can't do that. No. All right. So I'm explaining it so that to make it easy. If everybody in the world could recoup all of the credit that's been put onto the Monopoly Board of Commerce, that would equal somewhere between $400 and $500 trillion. It's not possible, because it's a ledger. It's ledgers. So you've just got ledgers of credits and debits, and then you've got taxes being paid on those ledgers year by year. Yeah. So it is the taxes that are being recouped. It is not the credit itself. And I think it's confusing because we've called it bank payment recoupment. We've called it mortgage recoupment, and people go, oh, so we're going to go and we're going to sort of unlock this big safe at the Treasury, open the door, and there's a shelf where all the mortgages are on, and we're going to pick one off, which is the face value of the mortgage, and we're going to take it out and get it back and get the face value of the mortgage back. Yeah. And then the the amount of mortgage debt in the world is going to go down by that much. Yeah. That, I think, is how some people have framed it in their mind.
I think that's how a lot of people have framed it in their mind. I'm not going to lie. When I first learned about this, that's what I thought it was. I thought it was the sum total of everything I'd spent out my bank accounts for X number of years and the face value of the mortgage, and that's what I was recouping. I was recouping what had, what went out comes back. But it's not that at all, is it?
Well, it kind of is, but not in the way that people understand it. So
yeah,
there is an amount. So if you imagine that everyone who is putting energy onto the Monopoly Board of Commerce, when they make a bank payment, that's a promise. It's an energy transfer. When they sign a mortgage contract, loan contract, have deductions taken out of their wages, all of that energy is now transferred onto the Monopoly Board.
Yeah.
So you've got to start with what is real and what is artificial. What is real is living men and women. Yeah.
Yeah.
That's real, tangible, and emitting energy, running on energy.
Yeah.
And then what is artificial is the Monopoly Board of all the artificial constructs. As I've said many times, you can't ring up the company and say, I want to talk to the company. The company is sitting on the Monopoly Board.
Yeah.
So the best way to get your head around that is to say, well, if it's real, can you talk to it? Can you go out to dinner with it? And if you can't go out to dinner with it and can't talk to it, it's probably artificial. The company is artificial. The birth certificate construct is artificial. The United States Treasury is artificial. The government is artificial.
Yeah.
It's not, you can't have a chat with the government, can you? You can chat to somebody from the government.
Yeah.
You can't actually talk to the government. You can't talk to the company. You can't get the birth certificate out of your drawer and have a chat with it.
No.
So the separation of what is real and what is artificial is fundamentally important.
Yeah.
Then you say, okay, well, if everything on the Monopoly Board is artificial, how does it run? What's causing it to run? It's our energy. So if our energy is causing it to run, because it can't run with no energy, the energy is the credit. How does the credit get on to the Monopoly Board? Well, it gets on there because we transfer it through our signature. And even if it's not a physical signature, as in a pen and a bit of ink and a bit of paper, the definition of a signature is a mark.
Yeah.
Or an action. It's an action. It's an intent. It's actually an intention. So what you're doing is you're intending to transfer some energy through a negotiable instrument, which is a promise to pay in the future, because you can't pay now because there's no money to pay now.
No.
And that's a really big, like, what's he talking about? How can there be no money? I've got some money in my bank account, so I can pay.
That was a light bulb for me, for sure, when I first heard about that one.
Yeah, it's like, well, surely I can pay for things. I've got some money in my account. I can pay from there. Well, not really, because you're not making a payment. You're just issuing another promise to pay in the future. It's endless promises to pay. And those promises are energy. It's you're transferring the energy from the living you, the soul, if you like, the energy of consciousness, onto this artificial Monopoly Board, where it's being accounted for in ledgers of credit and debit ledgers, and the banks are doing the accounting as the nominees. And then, because they need this energy to expand and do things on the Monopoly Board, for example, has anybody, I'm sure some people have, but every time there is a major problem in the world, like the credit crisis of 2008, like the pandemic, alleged pandemic in 2020, 2019, 2020, 21, 22, etc., the governments are magically able to pump in to the economy billions, if not trillions of dollars.
Yeah.
Pound, euros, yen. But where do they get it from? You know, are they going to some secret fund somewhere that, you know, is there some secret fund that they go to and knock the door and say, hey, we're a bit short this year. Can we draw some out from our savings account that's with your organization, and we'll use that to put into the economy to finance the war, or finance the credit crisis, or finance the pandemic? No, they just make promises to pay and then print it with ledgers and nominees, which are in the case of government money, it's central banks that are acting as the nominees for the government, and the government is making the promise to pay. It creates the currency, and the promise to pay is backed by what? By our energy.
Yeah, the energy of the
Everything
people.
is backed by our energy, and that energy that they're backing it with is taxes. So interestingly, we're talking about HMRC as a tax collector. So the way that they are, the way that the system is working with taxes is the taxes are paying the interest on the debt. So the debt is artificial. The debt is created through the Treasury and the Bank of England, if it's in the UK, making a promise and creating currency out of nothing more than the promise and the signature. But now it's the signature of the Treasury, right? The Treasury is now making a promise to pay, and the Bank of England saying, well, we'll take your promise and we'll give you the currency back equal to your promise. And how are you going to pay us the interest on that promise? Oh, well, it's okay. We're going to collect taxes from the citizens and we're going to pay you the interest out of that.
From the taxes, yeah.
From the taxes. So taxes have got really nothing to do with funding the schools and the roads and the, you know, the good things that the governments want you to believe. The taxes are just paying the interest on the credit that's being created out of the signature of the Treasury, in the same way as when you go and get a bank, a mortgage loan, credit card, or make a bank payment, you're just doing it on a smaller scale. So all of this energy is being used on the monopoly board, and that those that are really using it, which is the investment banks, they're really the biggest users of it, and they multiply it, and they're very, very clever at what they do to expand it through what they call hypothecation. They use that energy, and they are debtors, which is what a lot of people are never going to easily comprehend, right? So Goldman Sachs, that you would imagine is, you know, if you knew about banking, you'd know that Goldman Sachs is one of the richest, or appears to be one of the richest investment banks in the world. Yeah, is actually a debtor. Because they're on this artificial monopoly board as a debtor. They have more debt in their organization, but they're still a debtor. And they have to pay taxes to use that energy. So that energy is a debt. It's positive when it's transferred from the signature, the originator of the signature, and then it becomes negative. And everything on the monopoly board is a negative because it's all debt. Yeah. It's all minus, yeah.
And if you're using debt, get confused, don't they? People think that the world runs on a credit-based system, that there's value to everything that's moving, and there isn't. No, the value is in here. Everything is a negative on that artificial monopoly board. Yeah. So people say, you know what? I've got this, great big house, got this really successful company. I'm doing really well. I can add up all my wealth and add it up to a very large amount. And what they don't realize is that is a negative amount because it's debt. Yeah. So the debtors, which includes the investment banks that are ultimately using the debt,
because that's what they do, is they are very, very good at multiplying debt, using debt. And they have to pay to use that debt. And they have to pay taxes to use the debt. The debt is the energy. And they have to pay tax on the energy, the use of the energy, to the United States Treasury, because the United States Treasury is the trustee in bankruptcy of the entire monopoly board.
Mm.
And if everything on the monopoly board is a debtor, and that means that the creditors need to collect taxes for the use of their energy, that's what the job of the United States Treasury is, to collect the taxes from those that are using the debt, and that's predominantly the investment banks. There are others, but let's just keep it simple. And they are paying taxes every year for the use of the energy to the trustee in bankruptcy, which is the United States Treasury. And the United States Treasury, if you command them in the right way and set it up in the right way, has to give you the taxes, because the taxes belong to the creditors. And the creditors are the living men and women that have transferred their energy onto the monopoly board. But how you get the energy, how you get the tax rebate or the tax recoupment is, some people have said, I'm not saying it, but some people have said it's the genius of the Clifford Protocol. Is how do you unpack that? How do you navigate through that? How do you figure it out so that you can actually lawfully get that energy back and use it on the monopoly board and reuse it on the monopoly board? Without going to jail. That is the Clifford Protocol. It's taxes that you're recouping, not the face value of the security. Securities stay there, right? Because you're issuing a security when you make a payment, when you get a mortgage loan or credit card. The actual face value of that security doesn't go away.
No.
But it generates a tax. It generates a tax flow that is paid to the United States Treasury. And it's the taxes on the use of the securities, which is what you're recouping.
Yeah. Just so that everybody can be clear. It's not the credit itself. It's not the security that you issued. It's the taxes that they have paid for the privilege of using that credit that you created in the first place. That's what you're recouping.
I used an example, which I think some people got their head around, right? So imagine that you own a house. There is no mortgage. And you want to rent it out. So you put it on the rental market and people come and live in it and pay you rent. When you put your energy onto the monopoly board, the rent for the use of your energy is tax. And that tax at the moment is going to the United States Treasury, but it should be coming to you because it's your energy, like it's your house. You should be getting the rent. You wouldn't be happy if the rent on the house that you own was going to somebody else and you weren't getting any of it.
No, you'd want it back.
You'd want the rent, because it's your house. Well, your energy is like the house and the taxes is like the rent. So that may be a way of people getting their head around this, right?
No, that's a good analogy. So the next question is, does recoupment apply to all transactions coming out of a bank account, including mortgages, loans, and general spending?
So the way that the record keeping runs at the United States Treasury, they have an algorithmic system. It's called the 810 algorithm. What they're doing is, and they have a very sophisticated system that looks at the energy that's gone on the monopoly board. That's normally done, springs into existence through a clearing bank. So all the banks that you know, all the names of banks that everybody knows that has an account, they are called clearing banks.
Clearing banks.
They are clearing the energy, right? They are your energy's going through them in one way or another, and they are clearing, and then they are bundling up all those deposits, all those securities, all those promises, all those signatures into securitizations, and then they're selling those to the investment banks. who operate in the United States. Why would they operate anywhere else? It's the center of the system.
Mm.
Yeah, they're not going to operate in Russia, are they? Because it's the dollar. It's the United States dollar-based system. So that's why all the investment banks headquarters are in New York, in Wall Street, because it's a dollar-based system.
Yeah.
So for people who are thinking, well, I don't live in the United States, I live in some other country.
Doesn't matter.
How can I possibly recoup taxes from from the United States Treasury? I don't have anything to do with the United States Treasury. Well, you do, because the clearing banks who have taken in your promises to pay in one way or another, or issued mortgages, loans, credit cards, whatever it is, they are selling those promises to pay to the banks in America, who are then paying taxes to the United States Treasury.
Yeah. Okay. So it's basically anything that leaves your bank account, and it doesn't really matter where you're from. And like you said before, it doesn't really matter. We're not talking about an actual physical signature here, are we? Every time you tap your phone,
yeah,
every time you put your PIN number in, it's the same thing. It's
I call it signature credit, because it is. I mean, in the tax manuals, there are references to the signature, right? So it's not just me saying it's signature credit. It is actually referred to in the tax manuals, because it is the intention. It is the trigger point. It is the promise has to be backed by something.
Yeah.
If you type in 4 digits on your phone or on your computer, or on you hold your Apple Pay or whatever it is you're doing, that activity is the signature. It used to be a physical signature, but now modern technology, it's just tap your phone, do something very easy, and it will magically leave your account and arrive in the other guy's account.
Yeah.
As if it's by magic. Yeah.
Okay, moving on. Next question. Can members recoup from long-standing banking relationships? For example, accounts held for 20 to 30 years.
Yeah, so what I'm going to go into now is this in accounting, it's called amortization.
Yeah.
You amortize. So if you had a bank account 25 years ago or mortgage 25 years ago, you can't go back 25 years and put in a tax rebate or a tax recoupment claim for 25 years ago by going back to that tax year.
No.
Because that tax year's come and gone, right? You can't send something to the United States Treasury saying reopen the tax year of, year 2000. Because I want to recoup some taxes from the year 2000, because that's when I made my bank payments, or that's when I got my mortgage.
Yeah.
Because the IRS, United States Treasury, are going to say, no, we closed those records down. We only look at the last 3 tax years. So our electronic algorithmic system is only looking at the last 3 years. It can't go and reopen tax years from 25 years ago, or 10 years ago, or 5 years ago.
No.
So all it can do is look at what's going on in the last 3 years, which is quite interesting when you look into it, which I have done, right?
Yeah. In
an artificial system, which is all ledgers and computer records, it's an enormous amount of records to keep, isn't it? If you have to keep records for every single tax year, going back for however many years, many years. Or would it not be easier just to look at the last 3 years, so that you give people the ability to make a tax rebate claim within the last 3 years, which would stop them from claiming tax rebates from 25 years ago?
Yeah.
where you'd have to keep all those records if you were running the United States Treasury.
Yeah.
When
and it would just grow year on year on year, wouldn't it, as well? Get worse and worse.
You've got hundreds of millions of taxpayers, literally, and then you have to go back 50 years, 100 years. I mean, the amount of data would just be, even for the modern AI systems, it would be a struggle for them to keep up with all that data, right?
Yeah.
So what they do is they say, well, we're only going to assess the last 3 years, assessment, right? And what we're going to do is we're going to stop people from making tax rebate claims from prior to 3 years ago. We're going to give them a window where they can file for tax rebates during this last 3 year window, because they want to control the data, don't they?
Yeah.
So the question is, how do you then say, well, 25 years ago, I took a mortgage out and I now want to recoup the taxes
on that mortgage,
on a mortgage that I took out 25 years ago, or bank payments I made 25 years ago, right? And I can imagine a lot of people are going, I don't get that. How does that work? Yeah, I can imagine that. A lot of people are scratching their heads thinking, how on earth does that work? Well, it works like this. It's called amortization. So what you do is you take the past and you bring it into the current. And because what the IRS system is going to look at, it's going to look at who is the clearing bank.
Yeah.
Where do they bundle their securities? Where do they sell those securities? Which investment bank buys their securities? And how much tax does the investment bank pay on the 945 tax module for these particular clearing banks that have sold the securities which originate from the signatures? How much taxes this year, last year, and the year before have been paid by the taxpayer, which is the investment bank that is now paying taxes, the taxpayer, on the energy, which is the promises to pay made maybe many years ago, but they can't tell. The IRS system isn't going to say, oh, Mr. Smith bought a Mars bar 25 years ago in this newsagent shop. And
I can tell you now, they were bigger back then than they are today.
They were bigger back then. They were the Curly Whirlies, if you know what I'm talking about. And we've got that in our database, that 25 pence that he spent on a Mars bar 25 years ago, or 10 pence, whatever the cost was, we've got this amount of taxes stored up in our database.
Yeah.
Waiting for him to come and claim them back through the Clifford Protocol, which is an international grantor trust that is going to file a 1099 OID. And somewhere in this enormous array of data, we can track that Mars bar sale from 25 years ago.
Yeah.
It ain't going to happen, is it?
No, it ain't.
So what they have got, the IRS system, is they've got the clearing bank. They've got the amount, who is working with that clearing bank, the investment bank that is bundling all those promises to pay into investment securities. They can tell how much that investment bank is paying them, the United States Treasury, in taxes on the 945 tax module.
Okay.
And then you've got a grantor trust that's been created, which is now now qualifies as the holder in due course of the credit, which is the holder in due course of the tax, which has come in from the taxpayers. And that grantor trust wants $1 million of recoupment of taxes, and has the taxpayer, which is the investment bank, paid more than $1 million in taxes in this year, not 25 years ago, in this year? And if the answer is yes, then the IRS algorithm is going to tick all the boxes, and it's going to issue the wages and tax transcript. But it isn't going to search through trillions, billions, trillions of transactions and try and match them all up. It's just going to look at the big numbers. It's going to look at Goldman Sachs has paid $100 million in this tax year on their 945 tax module, and we've got recoupment claims from 100 grantor trusts that are trying to recoup from the Goldman Sachs 945 tax module of 90 million.
Yeah.
Goldman Sachs have paid the Treasury 100 million in taxes on the 945 tax module, and the grantor trusts are trying to recoup 90 million. So 90 is less than 100. Tick the boxes, let it go through.
So does it matter in this example of somebody saying, well, I was with, whoever it was, I was with Lloyd's or I was with TSB 30 years ago, or maybe it was a bank that they were with at that time, and they're trying to think about this amortization process and trying to think about adding all of that up, best kind of estimate in terms of what they've done over those years. What if some of those banks don't exist anymore? What if they've changed names? What would happen then?
Well, that's a great question. I mean, you can go through banks that have gone bust, right?
Yeah.
I mean, there's Icelandic banks that allegedly went bust because of the credit crisis in 2007, 2008, right? Kaupthink Bank went bust.
Yeah.
Northern Rock went bust.
Yeah.
Bear Stearns went bust. Many, many other banks went bust. But here's the reality, right, of how the system works. When a bank goes bust, the securities that they have sold don't go bust. They stay there. That's world debt, right?
Yeah.
So the clearing bank may have gone bust, but the securities that they enabled to spring into existence and then sold to the investment banks. It's interesting that find me an investment bank that's gone bust. You won't find one.
I can't think of one.
Not a proper one.
No.
Not a real, not one of the club, not one of the inner circle investment banks, not one where if you trace the lineage of the bank back to Jekyll Island, when the Creature of Jekyll Island, that book that G. Edward Griffin wrote, none of those guys have ever gone bust because they're in the inner circle club. Yeah, they're the elites. They don't go bust, do they? How could any bank go bust when there's unlimited credit and there is no money of substance? It's an interesting question that I'd love to ask some intelligent people who call themselves economists.
Yeah. Yeah. So let's move on to the next question. How does recoupment work if someone hasn't paid much tax historically? Is this still relevant to them?
Well, they're two different things, of course. So, the amount of tax that the body corporate birth certificate construct is paid through promises to pay, by the way, that had to match some numbers in their account, because you can't make these promises to pay from a bank account unless you've already got some digits in the account which are equal to or greater than the promises you're going to make. That's your checks and balances. But you can go and get debt. You can get as much debt as you want, can't you? You could go, in theory, you could go and get 10 mortgages on the same day, in theory. It'd be quite difficult to do it, but you could do it. And that's your signature being used 10 times on the same day to create 10 different mortgages. And people have done this. They've gone and got multiple loans, credit cards, and mortgages all on the same day. So you can get unlimited amounts of debt, but you can't spend more than is in your bank account, because that's your limit. Your limitation is what you've got, unless you've got an overdraft, which of course is like a debt anyway. So it doesn't really, it's nothing to do with that. Taxes are a separate thing. You know, the HMRC say you owe X tax, or the birth certificate construct owes X in tax. Well, you can only pay that if you borrow money to pay it, or if you've got some digits in an account somewhere, which is equal to tax. But they're not the same thing, are they? They're completely separate things.
No. Okay. Again, this is just understanding. You know, this may have come from a completely new member that doesn't fully understand how this works. So let's move on. Those were the sort of the few recoupment questions that we had. We're now kind of moving on to mortgages, loans, and just debt in general as well. And the questions that we've got here, first one is, can recoupment be applied to mortgages specifically? And how does that process work?
Yeah, so the mortgage itself springs into existence from a signature. The bank takes that signature, promise to pay, as an asset to begin with. They match it on their balance sheet with a liability of an equal value. That's where the debt springs into existence. That's the security that is going to be traded by the investment bank. So then they sell that security, which is equal to the value of the mortgage. They sell it to the investment bank that they have a partnership with, because they've all got partnerships with investment banks, and the investment bank is going to start paying taxes on the use of that security, which is the mortgage signature, for however long the mortgage contract lasts for. In fact, it's actually even longer than, even if you discharge the mortgage, the taxes are still paid on the outstanding mortgage.
Wow.
Which isn't outstanding. It kind of is outstanding, but it isn't really, because it's still a security in the system.
Yeah. Okay.
Because you can't pay it off, right? So this, I know this isn't the question.
No, but people need to understand this.
Yeah. So people say, I paid my mortgage off.
No, you
did you? No, you haven't. What you did was you got another security that was equal to the value of the previous security, and you gave another security, and all you did was increase the amount of debt. You didn't have to pay interest on the first mortgage because you got a second one that discharged the first one.
Yeah.
But now there are two debts in the system. Nobody paid the mortgage off. No one. It makes me smile when I hear people say, yeah, I did really well. I paid my mortgage off. I said, did you really?
Yeah. If only they understood, which is why we're doing these Q&As and why we do these webinars as well. So next question is, what proof is needed for things like a mis-sold mortgage or historic lending? That's an interesting
Well, again,
one.
it's you know, whether the mortgage was sold in accordance with the principles, the disclosures, and all of the good things that people should be following if they're in the mortgage market, and that's what they do. It's got nothing to do with the signature and the creation of the credit itself. It's got nothing to do with the recoupment of the taxes. It's a completely separate subject. It's to do with mis-selling of financial products. Well, that's separate from recoupment. It's separate from the subject of the webinar, which was to do with dealing with the problem of tax avoidance. So they are good questions, but they're not really that. I mean, it shows that the audience had a very mixed blend of problems and gaps in comprehension. So
well, in terms of a mixed blend of problems, here's another question. How does this process actually help someone facing foreclosure or eviction?
Well, it can do, and that is the mortgage foreclosure protocol, one of the many protocols that I've developed. So if you are facing a mortgage foreclosure, you can't go in. I like using examples, right? Because I think it helps people. So imagine the scene. There's a courtroom, and on the left-hand side, you've got the lawyers and the barristers who are there to represent the mortgage provider In the center, always obviously up high, you've got the judge.
Yeah.
Always like to sit up high.
They do
And then
indeed.
on the right-hand side, that's where you are, right? And you're really brave because you're going in there without any representation. You're going to do this yourself, right? And if you walked in there into this courtroom, and this is about mortgage foreclosure, and you on the right-hand side of the court, and the judge says, okay, so stand up and tell us why you're here, right? Because they always ask that. They always ask the obvious question, why are you here, right? That's a very common question they ask, right? Even though it's blatantly obvious why you're there, they always ask you. And you stood up and you said, well, I was on a webinar a couple of weeks ago, and there's this fella called Ian who says that you can recoup your mortgage. And he says that the mortgage provider didn't lend any money, and the mortgage provider basically sold my promise as a security to an investment bank in New York. And I've filled some paperwork in and agreed to go ahead with the process. And that mortgage face value is being recouped via the United States Treasury. So the reason I'm here, Judge, is to tell you that the mortgage is a fraud. It doesn't really exist in the way that these guys on the other side of the courtroom have been telling you. And I'm here because I want you to strike out their case of mortgage foreclosure, because it's all a fraud, isn't it? Because I'm the creditor and I'm looking to recoup the face value of the mortgage through Ian's scheme, which apparently has been very successful. And I want you to strike out the mortgage provider's case. What do you think the judge is going to say?
I don't think he's going to say anything. I think he's going to laugh, is what I think he's going to do.
He might laugh, or he might say, it depends how sarcastic he is. He might say, well, that's a very interesting story, and it might be true, but we're not in the United States. We're in the UK, or in Canada, or in Australia, or in New Zealand. And we don't get involved in what happens in New York or what happens in the United States Treasury. All I care about is that there is a charge. The guys on the other side of the courtroom appear to have a mortgage charge on the property which you've been living in.
Yeah.
So that's all I care about as the judge is there or is there not a charge on this property? Because if there is and you haven't paid the mortgage, then that's why we're here. So what have you got to say about that? And that's pretty much what would happen. They're only interested in the mortgage charge, right?
Yeah.
They don't want to get involved in the engineering of how the mortgage came into existence. They don't want to go down that road because they know that they would lose that argument every time. So they don't have the argument. They just talk about the charge on the property. So how does it help, right? So if you file a case in New York against the investment bank that has been using your credit and paying taxes to the United States Treasury, where you, the living man, woman, the living soul, is the creator of the credit, is the signature energy, and you challenge the investment bank with what's called an adverse claim, because they've been holding themselves out, the investment bank that owns the mortgage security, that is paying taxes on the mortgage security, they hold themselves out every year by paying taxes on a security which they claim to own.
Which they don't.
Which they don't. So you challenge them with what's called an adverse claim. You send them an adverse claim that says, prove that you are the owner of this security that you've, by the way, been paying taxes on, because my trust, which I am the grantor of, has filed a 1099 OID, which is now the rightful and lawful holder of the credit, the securities actually, and the taxes on those securities belong to the grantor trust that I've set up, not to you, investment bank. So you send them an adverse claim, to get them to prove that they are the actual rightful owner of the security, and the credit within that security originated and belongs to them, when of course it doesn't. And under the 1939 Trust Indenture Act, or Trustee Indenture Act, they can't make a false statement. They can't lie and say, oh yeah, that mortgage does belong to us. No. They have to prove it, and they can't prove it. So that's what's called an adverse claim. So simultaneously in the United, if you're in the UK or Australia or Canada, you are challenging something about the process. So there's something in the mortgage foreclosure process, which is, there's a procedural error somewhere in the process. There always is.
Yeah.
Because they always make some error somewhere. So you challenge the procedure in wherever the court case is going on, the mortgage foreclosure court case, and then you join the two together. So you challenge procedure to stall it in wherever the mortgage foreclosure case is, and then you get an adverse claim, and then you prove in the New York court that your trust, which is your grantor trust, is the holder in due course of the security, as evidenced by the 1099 OID claim.
Yeah.
And then you say to the court in the UK, Canada, Australia, wherever the mortgage foreclosure is, you join these two cases together, and it's called international comity.
Yeah.
And the New York case is a higher profile than the case in the UK, Canada, Australia, wherever. And the judge in the local court, in the mortgage foreclosure court, has to take notice of the judgment or the court case that's going on in the United States, in New York, because that is a superior court. Why? Because that's where the real argument should be taking place.
Yeah.
Because the true party of interest is not the mortgage provider in the UK, Canada, Australia, New Zealand. The real party of interest is the investment bank that is operating in Wall Street in New York.
Yeah.
You join them together.
UK bank sold it to.
Yeah. And then if you win the case in New York, which you should do, because the investment bank can't prove that they actually are the originator of the credit, they're just a nominee for the creditor.
Yeah.
And the new nominee's turned up that is actually representing the true creditor, the living man woman, because the living man woman is the beneficiary of the grantor trust that has now become the nominee for the true creditor by filing a 1099 OID tax return.
Yeah. And
you can prove that the United States Treasury has accepted the 1099 OID filing, because on the electronic filing software that the tax preparer that you've employed to file the 1099 OID can prove that it's been accepted. And once it's been accepted, then the record has been corrected, and the investment bank no longer is the nominee for the creditor. No, your trust is now the nominee for the creditor. Your trust is the 1099. It's going to file the 1099 OID, the grantor trust, which is pivotal to being able to recoup credit lawfully.
Yeah. Yeah.
Join the two cases together. The local case has to be stalled. It's called a stay whilst the New York case is going on.
Yeah.
And then you should win in both. If you don't win in one, you win in the other one. And the worst that can happen is you get the credit, you get the tax recoupment, which is equal to or greater than the amount of the mortgage, and then you discharge the mortgage, and then you recoup the discharge.
Yeah. Yeah.
So you can't lose.
Fantastic.
Well, unless you make some mistakes, of course.
Unless you make some mistakes along the way. Yeah, I understand. So another question, can people recoup or resolve issues with things like bounce back loans or company debt?
Yeah, I mean, any debt that is sprung into existence through the signature, and that includes bounce back loans, it includes any kind of debt arrangement. There is a signature that created it.
Yeah.
Forget what the government said. I looked into this, right? I was intrigued, right? So, because I'm a bit like this, I went and looked at who are these banks that are providing the bounce back loans.
Mm.
And where are they getting the credit from?
Yeah.
Is it any different from any other loan? And a lot of people should have asked this question at the time, but of course they didn't. How are the banks affording to lend out billions in bounce back loans when the
During a
economy
pandemic?
when the economy needs?
Yeah.
When hardly anybody's going to work for a period of time, and businesses are grinding down to a halt, and yet the banks somehow magically can lend billions out, and then seemingly not be affected by that when hardly anybody's paying the bounce back loans back. Some people are, but there's billions that aren't being paid back. It's an interesting question.
It is.
I'd like to ask some really intelligent people who understand the subject. How does that work? I'm being facetious when I say that.
I know.
Obviously.
I know. Okay, so let's move on. Tax and legal concerns. We've had a few questions here. You kind of went into this at the beginning of today, Ian, but let's just cover this as it is a question. What is the difference between lawful tax avoidance and illegal tax evasion?
Well, it's got to do with disclosure, pretty much. Tax evasion, or the black market, if you like, where people exchange cash.
Yeah.
They never declare it. So I remember years ago, I had one of my many clients was a scrap dealer.
Okay. Yeah.
One of the richest guys in the whole area, right?
Yeah, I can imagine.
And then you looked at his accounts and he made like $2 bob a year.
Yeah.
But he's driving around in a Rolls Royce with a massive, great big house, and a huge scrapyard. Had all the trappings. But you looked at his accounts for his scrapyard and he hardly made any profit.
Yeah.
Which probably wouldn't happen today. I'm going back 30 plus years ago. And that's because he was using cash.
Yeah.
And never disclosing it. Well, that's tax evasion, yeah, because you're not disclosing the revenues that are coming in. Just call them revenues. I don't want to call them income because there really isn't an income. So revenues aren't being disclosed or being disguised. People setting up offshore structures and then trying to hide all of their revenues in offshore structures, which is quite a common tax evasion strategy. And that is, of course, the body corporate birth certificate is duty bound to disclose its revenues. In every country, it's got to disclose its revenues if it's going to follow the legal system. Many people think they can get away with it without disclosing stuff. And they think that the tax office isn't going to figure it out. Well, another little story is I remember when Bitcoin first came out, a lot of people said to me, Ian, go and get some Bitcoin and nobody will be able to know what you've got. And it's like, oh yeah, why do you believe that? Well, because it's Bitcoin. It's not on any track and trace ledger. And I said, really? You think it's going to stay like that for very long? And what's just happened in the last 6 months is that people bought and sold Bitcoin for massive gain. Suddenly the tax office is closing in on them.
Yeah.
But apparently you could have bought Bitcoin and no one was going to know about it. I'm talking about years ago when Bitcoin first came out, right?
Yeah. Yeah.
So it's disclosure, yeah?
Yeah.
Now, if anybody thinks that the tax authorities don't already know what you're making, what your revenues are, then you are living in a dream world. You're living in a delusional dream world. They know everything about everything.
Yeah. Okay. So
that doesn't mean you can't navigate your way around it if you know what you're doing. There's a really good scene, and we should play it on one of our webinars. In The Shawshank Redemption,
one of my favorite films.
It was one of my favorite movies. He's in this library that he's been able to build, and he's in there with Red, who is actually a murderer. He admits he's a murderer, and Andy Dufresne has been convicted of murder, but he's innocent. But he's a banker, and he's quite smart. He's up there. He's got a good level of intelligence, this guy. And they're talking about how Andy Dufresne has set the warden up, because the warden's money laundering and making a river of dirty money is the phraseology they use in the movie. And how has he managed to set the warden up, and how is he going to profit from that? And of course, Andy Dufresne sets up a fictional character. And manages to get a birth certificate and a social insurance number and a bank account, series of bank accounts, etc., etc., etc. Well, guess what Andy Dufresne did in The Shawshank Redemption? He set up an artificial construct. He managed to get it recognized by the system. He managed to get it bank accounts in the system. And he managed to divert the warden's river of dirty money, which he went, because he was a signatory on all of the bank accounts, which he was able to profit from when he went to Uluwatu, is in Mexico. The scene when he's rubbing the side of the boat and doing
right at the end.
White sand beach, right? So why do I say that? Because what Andy Dufresne did in The Shawshank Redemption was create an artificial entity that sat on the Monopoly board with an artificial name that was able to take part in the artificial system, which is exactly what we are doing with creating a grantor trust, sitting it on the Monopoly board. It can take part in the artificial system, the game. We should use that clip, I think. Red, who's played by Morgan Freeman, says to Andy Dufresne, because he's explaining this, and he says, "Surely you're going to get caught, and it's going to be serious." And then he realizes how smart it is, and he says, "You're not just good at pictures; you're a Rembrandt." So there you go. It's an artificial game with an artificial piece, and those that understand it can take advantage of it, and that's what you can do.
Excellent. So next question, Ian. Can existing tax debts such as HMRC liabilities, VAT, or penalties be discharged through this process?
You can discharge anything. If you're recouping signature credit, abandoned credit, you can recoup anything. So once you've got that signature credit flowing into your grantor trust, the new piece that you're going to put on the Monopoly board, you can use that signature credit recoupment to discharge anything.
And then recoup it back the next year.
Unless somebody says, it's £1 million and I want it in cash. And then you're going to have to try and draw out £1 million in cash and go around to someone with a suitcase full of cash, which you're going to have a hell of a job, because you ain't going to find a bank that's going to give you £1 million of cash these days.
No, because they won't have it. Exactly. So whether it's a debt with HMRC, a tax bill, whatever it is, you can discharge that. And because you've then discharged that and you've created a new security to discharge, because you can't pay for anything, as we've already established, you can recoup that the following year.
Because you make a new signature. You've discharged by signing something, signature credit, to discharge the original debt, which probably wasn't a debt, but it appears to be a debt. You're discharging a debt with a debt. New signature, new recoupment. And then I think that is the ultimate Rembrandt moment, is the discharge of discharge and the recoupment of recoupments.
Amazing. Here's an interesting one. How does this apply to people who are self-employed or earning commission, affiliate income, or trading income?
Well, it's all securities. It's, you know, it doesn't matter where the revenues come from,
No.
whether it's employed, self-employed, whether it's royalties. You might have written a book, you might have done something to earn royalties. It doesn't matter what the revenue is. It comes into your account and it looks like that's money, yeah, because it looks like money in your account, yeah, but it isn't money. It's just a number on a ledger.
Yeah.
And that's your limit as how much you can, how many new securities you can issue up to that limit, unless you've got an overdraft. Of course, you can issue some more securities above, up to the top of the overdraft limit. So it doesn't matter how those digits arrive in the account or accounts that you've got, whether it's whatever method it is, it doesn't matter. It's just a way of creating a ledger and giving you a limit of how many new payments, securities, promises to pay you can issue up to that limit that's in the account.
Excellent. So moving on from tax and legal concerns, we're now going to move into trusts, structure and setup as well. So first question in this category, Ian, is what are the most important elements required to correctly position yourself as a creditor within the system?
So the living man woman is always a creditor, because the energy that comes from the living man woman is, it makes them the creditor. You don't have to say I am a creditor and hang a plaque on your wall. You already are the creditor, right?
Yeah.
And it wouldn't make much difference if you did say that. If you did hang a plaque on the wall or put it, you know, screw something to your front door that said you're a creditor, you already are, right?
Yeah.
The fact that you are the agent for the birth certificate construct, which of course is the banker, which I've gone through before. The birth certificate construct is the banker that's issuing these promises to pay these securities. That the living man woman is always going to be the creditor.
Yeah.
So what you're doing, there are two things you're doing if you do the Clifford Protocol. The first is that you're going to correct the record that is connected to the birth certificate construct, and that's called the Envoy Protocol. Yeah. So you're going to correct the record by making a declaration, right? So a lot of people are very confused about this.
Yeah, they are.
They think that if you write something down on a bit of paper and send it to some official in the government, that they're going to get that envelope and they're going to go, yeah, let's go to our database and let's change the nature of the records that we're holding on this guy here.
Yeah.
Because we've just received this bit of paper that's come into our office.
And let's send them confirmation that we've done that as well.
And then let's write back to them and say, thank you for your notice or your affidavit or your whatever it is. Thank you for that. We've been waiting for you to send it to us for a long time. Thank you for sending it. We've changed our records, and we have sent you this notification back so that you could show anybody you wanted or you needed that you're now in our system under a different category.
Yeah.
That's what a lot of people believe is going on. But I'm going to change the paradigm a bit here, right? So allegedly, if you believe history, in 1939, the British government sent an ultimatum to the German government, to Hitler, and said, if you don't pull out of your attacks on Poland by a certain time on a certain day, we have declared war on you, subject to you pulling your troops out of Poland, right? A declaration. Now, they didn't not go to war because Hitler said, you know what, we're not going to confirm that declaration. We're not going to send it back and say, yeah, we understand your declaration and we're now at war. Because a declaration doesn't need the other side of the equation to acknowledge it.
No.
Because it's a declaration. It's not a contract that you send and you have to get a signature on it and then get it back. So a declaration of war doesn't need a contract. And a declaration of standing doesn't need a contract. It just is a declaration. And the declaration says, in many carefully put together words, because words are spelling, it's energy. So words being spells is making a declaration that the living man woman is no longer going to lawfully use the name of the birth certificate construct as in the way it has done before. It's going to occupy the office of the General Executor, which is the office that sits above the birth certificate construct. It's going to occupy that office as the General Executor.
Yeah.
And it's going to, if it's going to use the name of the birth certificate construct, it's going to do so without taking the liability. But that's a question and an answer session for a different day. Right?
It is, yeah.
It's quite a deep subject, right?
It is.
But it's a declaration, and then the creation of the grantor trust, which is the grantor is the birth certificate construct as the grantor, creates a trust, sets the trust on the Monopoly Board of Commerce, which is the artificial board with an artificial piece. And then the living man woman becomes the beneficiary within the trust indenture of the grantor trust as the lawful, correct and true beneficiary of the taxes which are going to come into the grantor trust that belong to the beneficiary. But the beneficiary cannot go into the position of stepping on the Monopoly board.
No.
Because it's an artificial board, yeah? You can't step on it, you can't pick it up. It's like a hologram. You can look at it and you put your hand straight through it, but you can't pick it up. You can only put a holographic piece on the board, which is the trust, the grantor trust in this example. So you're doing two things, making a declaration and putting a grantor trust on this artificial Monopoly board where the true creditor, the living soul, is off the board as the beneficiary of the grantor trust that sits on this artificial Monopoly board.
Yeah. So we've spoken about that many times, adding your own playing piece onto the board that you get to control as well. Okay. Do members need to create their own trust structure, or is everything handled within the ROS ecosystem?
Well, people can set up their own trusts if they want. I don't see why they would need to. But if they want to set their own trusts up for different reasons, I would caution them to understand what they're doing. And I would also caution them not to go to people who don't understand trust, because there's lots of people out there who just don't get it. They say they get it, but they don't really get it. When you put it under a microscope, a lot of the trust structures out there don't work. They look like they work, but they don't really work. You don't need to go and get any trusts, because we're going to set up the 1099 OID tax filing trust, grantor trust, and then we're going to set up the asset fortress protocol, which is where you receive your share of recoupments, spend and recoup from that private treasury. I don't see why you would need any other trust. There is no other. I can't imagine any reason to have any other trust. The asset fortress protocol will act as your treasury, your ultimate trust on the Monopoly Board of Commerce. You only need one of them. You can have more than one if you want, but you don't need more than one. No. You certainly don't need any other trust that I know of to do anything other than what the asset fortress protocol can do.
Excellent. Okay. So moving on. How should members this is a good one. How should members correctly name their trust to avoid confusion with their legal identity?
Well, I guess they're talking about the asset fortress trust, that private treasury. They can call it whatever they want. It doesn't matter what it's called. But, you know, if you picture the scene, right? So, you know, you go out for dinner and you want to use the bank account that is connected to and linked to your asset fortress.
Yeah.
Not that many people in restaurants actually look at the name on the card, but sometimes they do, and it's happened.
Yeah, I've had that happen. Yep.
Yeah, you go
I've
in
had
and
that
you say,
happen when I've had a company card, and it's the company name, but it's not me.
"How's that?" So I've had it happen. My wife took a card in. It was my card actually, and I gave her authority to use it. She went in, she wanted to buy something, and she gave the card to the shop assistant, and they swiped it through their machine. And then they said, "Is this card yours?" And she said, "Yeah, well, it's my husband's, and he gave me authority to use it." And they said, "Well, we can't do the transaction because we need to verify it's your card."
Yeah.
Now, it doesn't happen that often.
No, but it does happen.
It does happen. So if you've got a trust that is called the outer space yellow spaceship trust, or whatever you're going to call it, whatever name you can come up with, the psychedelic trust, or the whatever, you know, the magic mushroom trust, or whatever you're going to call it. When you go in a shop or a restaurant and you hand that over, they might say, "Is that yours?" They might do. They might not do. So it might be better to call it, in my case, the Ian Clifford Trust.
Yes.
And then they say, "Well, who are you then?" And you say, "Well, actually, I'm Ian, and this card belongs to this is my trust because I'm Ian. And here's a driving license or a passport with Ian Clifford's name on it, which of course isn't my name, it's the name of the body corporate. But I can then evidence that that card with that name on it is pretty similar to the name on the bus.
It all marries up. Yeah.
The marriage name or whatever name it is that you go by. And then they'll probably back straight off and go, "Okay, fine, we'll put that transaction through."
Yeah. Yeah. That to me makes the most sense. So before you start thinking of some weird and wonderful name for your trust, and it might sound amazing, maybe think again and just look at this more practically in terms of how you're going to use and benefit from your Asset Fortress Trust. Hope that makes sense. Okay, so what role do protocols like Envoy and Asset Fortress play in the overall process? We've kind of covered this, but maybe just a quick elevator view of Envoy. Like, I mean, you mentioned this literally moments ago, really, but
the bare minimum of the protocols that people need to enroll in is the Envoy.
Yeah.
For lots of reasons.
Yeah.
It's the Asset Fortress, and they need to be doing a recoupment of some sort. Let's call it the infinite money or the currency creation or the Clifford protocol, because they're all kind of the same thing, right?
Yeah.
So they need those three at the minimum level.
Yeah.
If they're going to play Monopoly at the advanced level, and get into that, you know, abundance where they've got the spend and recoup cycles going on, and are avoiding the digital ID, and they've got the ability to discharge all their debt and taxes. Those three, Envoy, Asset Fortress, let's call it the Clifford protocol because it's based on the signature credit recoupment. Those are the three basic ones that everybody needs, and there's all sorts of variations on that theme, combinations of those things, different ways of using them, but those are the three that everybody should enroll in my opinion.
100%. Perfect. Okay, so let's have a look at this on a wider scale then. What's the global application to this? We've often spoke about this being a one world economy, a one world system. Some people are still not getting that. So does this process work outside the UK, for example, in Canada, Australia, Norway, or the US?
Well, if the clearing banks that you're interacting with are part of the dollar system, which most are, even if they might not appear to be, they probably are in the background. For example, when I ran my financial services company years ago, I remember my head of finance came to me one day, many, many years ago, and said, can you sign this tax return for the United States Treasury? I said, why would I want to sign a tax return to the United States Treasury? This is like 25, 30 years ago, right? I didn't know about the system then. Oh, well, we've got an EIN number, because my firm was a financial services firm, and we had to send in a tax return to the United States every year. And I didn't even know we were doing it until I was asked to sign the form, right? Because I was the head honcho of the firm. And I must have signed it before without realizing what I'd signed, probably.
Yeah, just sign this, but nobody told you what it was you were signing.
Yeah, Ian, could you sign this? And because I trusted my finance director, that's, you know, often that's how it is. So this time I saw the top of the form and it had the United States IRS logo on it, and I said, well, why am I signing a form for that for? Oh, well, because we've been registered with an EIN number. The firm has for years. Didn't you know that? I said, well, why did we need to do that for? Because I didn't know that it was connected to. So financial services firms, that's where I'm going with this, banks are part of the Bank for International Settlements, IMF, central banks, clearing banks. Somewhere in that triangle, that pyramid, the bank that you are using as the clearing bank is probably part of the Bank for International Settlements, IMF, central banks, dollar system.
Yeah.
Probably somewhere, even though it might not be obvious, the bank that you're using or banks that you're using in your country are taking your energy, securitizing it, selling the securities to the investment banks, which are in the United States.
Yeah.
And that's where you can do recoupment of signature credit energy, tax returns, tax recoupment, because it's going on in the United States, even though your deposits, your promises to pay are not going on in the United States.
Yeah. Yeah. So to tag on from that, the next question is kind of a follow through, really. Are there differences in how this applies depending on the country someone is in?
No, not really. It's a one world system, which is based on the dollar, and everything. Even if your bank is in Japan and you're spending in yen, that's converted to the dollar in the background. People say, "Oh, well, you know, I live in Switzerland, and you know, I use a Swiss bank." Well, do you think the Swiss banks are not part of the dollar system? Do you think that they have gold-backed currency in Switzerland?
Mm-hmm.
No. You see, there's a myth, and there is a massive deception, which isn't actually a deception. It's an assumption a lot of people make without any evidence or information at all, that all these countries are separate. They're all operating individually, and there's some sort of currency war going on between all these different countries.
Yeah.
When actually all that's going on is like a theatre.
Mm.
There's a load of actors on the stage, all playing to a script, that all look like they're separate, but they're not really, because they're all joined together in the background in this one world dollar-based system. If the United States dollar loses the reserve currency of the world status, then it might change. But it's not going to happen anytime soon. Not for me.
No. Okay. So in terms of application, same. Got some questions here now to do with timelines and expectations. And I always think it's good to answer these questions because we want to set the right expectations with people as well. Because I think in some cases, those expectations might be a little bit skewed at times. Without going into the whole detail from September last year through to this again, if you want to get some context on this, guys, then you're going to have to carve out some time and have a look at some of the more in-depth interviews that I've done with Ian surrounding timelines and expectations. And that will certainly flesh it out for you as to why we are at where we are at. But elevator view, Ian, on the following questions, if you could please. How long does the overall process realistically take from start to recoupment? Is the first question.
So you've got to allow 9 months really from enrolling into the Clifford protocol to actually receiving the funds via Fedwire or ACH, which is a electronic bank transfer, into your Asset Fortress private treasury.
Yeah,
you've got to allow 9 months. It could be more if you started in the middle of November to the middle of January, because in that period of the year, the IRS, even though they don't close, they don't process the 1099 OIDs in that particular 2-month window. But the rest of the year, 9 months out of 11, they are processing the 1099 OIDs that come from the grantor trust, that are basically the trigger of how much signature credit tax you are recouping.
Yeah.
9 months. And there's a lot of steps. There's a whole series of steps which I'm explaining on this Saturday's webinar.
Yeah.
Of what those steps are. They're all very logical, and they have to be followed in an order, because if you can't, you can't jump over one of them, because it won't work.
No. So there's a good segue into, if you really want to understand this in more detail and you're new and you're interested in timelines and expectations and how it all works, then make sure you register for this Saturday's webinar as well. Okay. And if you've got questions, you can put your questions in at the point of registration. We do that every week. And then I collect the questions and we jump on here and we cover them. So in terms of members that we may have already who are going through recoupment, what is the current status of earlier recoupments, particularly 22 and 23? I think, again, there's confusion here. People are maybe getting concerned that this 3-year timeline, as in the IRS only go back 3 years, and we're now in 2026, 2022, that's now 4 years. What's happening? Am I going to lose my 2022s? So again, bit of misunderstanding, I think, in terms of how this all works.
Yeah, well, it comes back to amortization, really. What you're doing is you're saying, okay, because of the sabotage, some people may be pushed for time to get everything done, or we're pushed for time to get all of our ducks in a row for the 2022, because it is getting close to the middle of April is the last time that you can file 1099 OIDs for 2022, the 2022 tax year. But if we did miss the deadline, then we put those 1099 OIDs in the 2023 tax year.
Yeah, it really is that simple. Yeah, you just carry that balance over, move it into your 2023, and now you've not got a problem.
In the same way as we were discussing earlier, you had a mortgage 25 years ago. Yeah. You're recouping that face value in one of the last 3 years. It's no different. It's the same process.
Same thing. Hope that makes sense, guys. Okay. Next question is, when should members expect to start seeing results, and what are the key milestones along the way?
Well, the first big milestone is the wages and tax transcript, which is where we were in September last year. We were July, August, September. I think we had some in June as well. That is when the IRS system has ticked all the boxes and it's saying this amount of recoupment is due to this trust. Yeah. And that is the wages and tax transcript, which is a confirmation from the IRS of the amount of recoupment which is going to be funded by their system, by ACH or Fedwire, once the tax return has been submitted, which is a 1041 tax return, to claim that amount on the wages and tax transcript into a Fedwire or an ACH transfer to the grantor trust that's made the filings.
Yeah. Again, we covered this a little bit in more detail the other day on our interview, didn't we? When it comes to the validity of the wages and tax transcript. How, just while we're on that subject, for people who maybe don't understand, how significant is that?
Well, when you understand or comprehend that the IRS have an algorithmic system and they don't issue wages and tax transcripts unless the algorithm has checked out the recoupment to be real and bona fide and justified, it's very significant. Why would they issue a wages and tax transcript if they haven't looked into the recoupment itself? It makes no sense whatsoever. Why bother to issue that confirmation if they haven't actually looked at it? It would be it would be pointless, wouldn't it?
Yeah,
it would be meaningless.
It would be.
It would be absolutely ridiculous. They're issuing these statements saying this is how much your recoupment for your trust is. Why would they do that if it didn't mean anything?
Yeah. And just so you guys understand what that means as well, that is essentially the IRS saying, this is yours. Where do you want it? Where do you want it sending? Where are we moving this to? And, I think for people to understand the significance of that and the evidence of that, well, I mean, here's ours. Here's one of mine. Can't really see it very well. They'll have to hold it in front of me, but that is a wages and tax transcript. That's obviously some of it's redacted, but you can see there's amounts on there for certain tax years. And it's very, very real, guys. And we've already had over 600 million confirmed transcripts like those across a multitude of our members' trusts. So in terms of the timelines, what you've mentioned there, 9 months, I think that is very realistic, between 9 to 12 months, depending on when they're filing because of the shutdowns. And obviously when the IRS come back in January, they're straight into tax season anyway, aren't they? So they may be a little bit slower then as well. So there is a window where they're kind of performing at their optimum level, I suppose. But ultimately, 9 to 12 months would be a really good marker for people to be thinking about. And in terms of those milestones, that is the big one. Everything that is done to get to that point has to go through that algorithmic check, has to go through the 810 algorithm, has to verify that the taxes on the 945 have been paid. There's a lot that goes into this. It's a process, and we can't bend or manipulate that process. We're just doing what we know needs to be done in the structure that it needs to be done in, and then we are under the governance really of the IRS in terms of their timelines at that point. So there's stuff that we can do internally, but a lot of it we are at the mercy of the IRS, shall we say, in terms of how quickly they decide to do certain things. Okay, let's move on. Platform and process. Now, this is again, maybe a little bit off topic, but I want to set expectations, Ian, which is why I've included this. Yeah. What's being done to resolve platform issues such as uploads, access problems, missing information, blah, 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 blah. I don't think people fully understand what goes on behind the scenes, what our development department has to do on a daily basis, and the struggles that we all face working internally as well. So I wanted to include this just to give people a bit more of an open window into the reality of what goes on behind here. I think a lot of people think we're just sitting around doing nothing, waiting for recoupments to come in.
Yeah, well, there's a very busy infrastructure. There's a big IT department. There is project managers, there's developers, there's a whole range of moving parts here. We're not just doing recoupment. Again, it's not like we're doing one thing and everybody's sitting around waiting for the IRS to send the recoupments and then there's nothing going on. That's not the case at all. We're very busy. And there's been a lot of sabotage going on in the IT area. Simon Goldberg and his crew set about sabotaging our infrastructure by attacking all manner of online infrastructure, and our platform was one of the things that was attacked. So if it didn't work for a period of time, it's probably because we were moving it from one location to another to make it more secure. Yeah, every now and again there are glitches, there are issues with the platform and what you can and can't do in it. Sometimes it hangs and freezes, but we are cleaning it up. It's like all IT platforms, it can get clogged up. You know, can anybody honestly tell me that every time they go to their computer, it works perfectly, and all the software on their computer works perfectly? If you do tell me that, you're either not using much software or you're not using a computer.
Or you're not using your computer much.
Yeah, I can tell you regularly things I use day by day. Sometimes I have to refresh my computer. Sometimes I have to restart it. Sometimes I have to log in and out of these different software applications.
Yeah.
And we're talking enormous enormous companies that have software platforms.
Yeah.
So if they can't make their system work 100% of the time, then nor can we, for the same reasons. Things get clogged up, they get blocked, they get confused, they get bandwidth issues. You get a million people trying to use your platform at the same time, and it can't cope with it. So some people have an experience where it doesn't work exactly the way they want, and other people never have that experience.
Yeah.
A lot of people don't use the right password. A lot of people have more than one account, which is a problem because they forget that they've got more than one account. They log into one account and they don't see what they're expecting because they're logging into the wrong account. There's quite often, I mean, I remember when computers first came into existence in the office, my technology manager used to have a saying that he used to repeat and repeat and repeat and repeat and repeat, which was, if it doesn't work, restart it, and it will probably work again after you've restarted it.
Yeah. Yeah.
And why would you need to restart it? Is it because it cleans things up and it starts from a nice fresh place again? So if it's not working, you might want to refresh it. You might want to restart your computer, and it probably worked then.
Yeah. I'm exactly the same. I'm exactly the same, guys. You know, when I'm using my laptop, if I've used it for the day and I've left it on and I haven't switched it off, I'm now coming back the next day doing more things, and you're just piling stuff on top of stuff on top of stuff on top of stuff, and it can muddy the waters. So refresh, restart, be proactive, and be patient. You know, we are working tirelessly behind the scenes on a multitude of development projects within the platform to make things more streamlined, to make things easier for the members, to make things quicker. You know, that is ultimately the goal with all of this, to make it easy to understand, easy to process, and just a more user-friendly experience. But it takes time.
But there is something very proactive that I've done in the last few weeks, which is to map out how to use an AI system. It's called the Argentic network, which is, and I don't like AI for all the reasons why I've explained this many times. I know what the agenda of AI is, but at the same time, we can use it to organize our platform, organize our projects, organize our knowledge, because you can use it to bridge knowledge gaps, as well as it organizing all your data and tying up all the loose ends and putting them all into an order. You can use it for that purpose across the entire organization, and it will exponentially increase our delivery of projects. It will exponentially increase any knowledge gaps, any best practice gaps. It will exponentially increase the efficiency and reduce the amount of errors, because there are errors in the platform. There's no doubt. Every IT platform's got errors in it, no matter how good the design is. So the AI system will be looking at helping us to streamline it, get it to fit for purpose quicker. Every project we do, a lot of people don't realize, you know, I do a webinar on a Saturday talking about a protocol, then we've got to go and build it all if there is a demand for that particular type of protocol, that particular type of solution. These things just don't magic themselves the next day. You've got to build it out. And, you know, a lot of people don't realize this because they've never done it. They've been a user, they've never been a creator of a system. If you use a system, you probably don't appreciate what goes into making it work. There's a lot more going into it than meets the eye.
Well, on that note, look out for my Meet the Team interview, which will be with the head of our development department, Ange, because I think once you watch that video, we haven't done it yet, but when we do, and we're doing a segment with every single person within each department, hopefully you'll have a more broader understanding, shall we say, of what goes on behind the scenes and how much effort is going in to delivering this for you. Okay, let's move on. Again, this is one that I want to cover because new members coming in, maybe looking at Republic of Old Souls, maybe looking at what was Matrix Freedom, maybe looking at Ian Clifford on good old Google or the internet. There's a lot of noise out there. You know, we've done several interviews about this, haven't we, Ian? So one of the questions here is there's a lot of conflicting information online. How should members interpret what they're seeing?
Well, it's actually very simple. You know, there's lies and there's the truth. It's as simple as that. The internet is full of lies. Why? Why is the internet full of lies? It's full of lies because it doesn't want you to know what we're doing and doesn't want you to know what I know about the signature credit recoupment in particular. This is the biggest thing that they don't want you to know about. If you think of, again, I'm going to use an analogy, right? So let's imagine that there's 8 billion walking around in the biggest prison camp on the planet. And they're all walking around the prison camp. And they can't see the walls because the walls are miles and miles away. They can't see them. But it is the biggest prison camp on the planet. And everything they do in the prison camp appears to give them the illusion of freedom. They can sleep when they want to sleep. They can eat when they want to eat. They can go and meet their friends when they want to go and meet them. They can travel from one part of the prison camp to another part. And they can do pretty much what they want to do when they want to do it. And if you ask them, hey, do you like this prison camp? They'd say, what prison camp? We're not in a prison camp. We're in this country called Canada, Australia, England, Wales, United States. What are you talking about? What prison camp are we in? We don't see any prison camp. There's no guards. Where are the guards? Well, and I'd say, well, one's just driven by. It's called the police. That's one of the prison camp guards, isn't it? And that TV over there that's with the politician on it, that is telling you how great things are going to be going forward and what they're going to do to sort all these problems out. Is that true? Is that information actually true? Should we actually really believe in that information that's coming out of that programming box? But of course, we're not in a prison camp really, are we? We're all free to do what we want, when we want to do it and how we want to do it, because that's the illusion that they've got us to believe.
Yeah.
Reality is that we can't actually do what we want, when we want to do it and how we want to do it, because there's always some kind of a constraint there that we can't necessarily see or realize. And they've got us under control whilst they've convinced us that we are free. So this is absolute next level genius. The slaves and the prisoners don't actually know that they're in a prison camp when they are. And you see, just before we started the video, and I'm going to tell it here, right? So Plato said thousands of years ago that if you imagine the whole of humanity is sitting in a cave, tied to the ground with a chain round the neck, they can't move their head round, and all they're seeing on the wall ahead of them is shapes moving around. And those shapes are because behind them there's a fire and there's some shapes, and the shadows are all moving around on the wall in front of them, right? And that's all they see is the wall and the shapes in front of their eyes. They can't move around. They can't get, they don't think they can get up because they're chained down. One day, one of them realizes that the chains around his neck and the chains holding him to the ground weren't actually tied down. And he picks them up and he walks out of the cave and he looks outside, and there's a whole other world out there, and the sky and the birds and the animals and the rivers and all of nature. And he goes, my God, how can I not have known about this other world that's outside the cave? I've got to go and tell everybody in the cave. They're all going to break free of the chains, and they're all going to come outside and come over and enjoy this other world that's just out there, but we didn't know it was there. And he rushes back into the cave and he shouts out, guys, just get up, just stand up and shake these chains off and get outside the cave and come and see what's out there. And everybody in the cave looks at him as if he was mad. This guy's lost his mind. We can't get off from these. We can't get up and shake these chains off because this is our world. We can't possibly believe that there's some other world out there. And then they call him crazy. They don't want to listen to him. He's the nutter that was stupid enough to break free of the chains and walk outside to another world. Well, that nutter, by the way, is Ian Clifford. In that story.
Yeah.
And all those people in the cave who are on the internet blogging and telling stories about Ian Clifford, the nutter, the pseudo-law fraudster who should be in jail, that's because I got up from the chains. And that's because I broke free from the cave. And that people don't like people. Most of them who are in the cave don't like people like me because I'm a bit different from them.
Yeah.
And I don't believe that the chains are real. I don't believe that the message and the narrative and the culture of the cave is the only cave that we can be in. I actually think there's another environment out there which is way better than the one that we're in. But the programming of the people in the cave want you to believe that that's all there is. And that's all you know. And I'm going to just finish my little parable with one little question for you. If I said to you that tomorrow and every day thereafter was going to be entirely different from today and every day that you've had so far, would you be inviting of that change or would you be afraid of it? Most would be afraid of it.
Yeah.
Some very adventurous people would say, what's it going to be like then from tomorrow onwards? And others wouldn't even know what it's going to be like. They'd just go, no, I want it to stay like it is now because I'm happy with how it is now.
Yeah.
There you go. And if that doesn't answer your question, then I can't help you.
No.
About you.
All I would say is, and we've covered this on multiple other interviews, is before you jump to any conclusions, is do your research. Ask some real intelligent questions. And when we say do research, do some real deep research, not page one of Google, but do some real deep research, get some context. Okay. If you want to really understand Ian's story, then Ian's launched a new website. It's this one. It's iancliffordwhistleblower.is. Looks like this. When you go to the actual page, I would encourage you, if you are new or even if you have been with us for a while, but for whatever reason, despite the journey, you have your doubts, then you need to get some context behind where all of this misinformation is coming from. So go to iancliffordwhistleblower.is, have a look at that. Do your own research as well. We'd encourage you to do that. But if you are going to do research, do it properly. Don't just look at page one of Google. So moving on, Ian, let's look at the bigger picture. This is a great question. What does success actually look like for members over the next 6 to 12 months? I mean, success can be categorized in so many different ways, though, can't it? You know?
What a good question. I mean, success, what it looks like to me, is that we have got to the point where my vision and my technical knowledge starts to come to fruition, and we get hundreds, thousands of our members using their private treasuries, and then there's going to be a different problem. We've had a problem of basically, our number one problem that we've had is how do we finance this organization that is going to become a sovereign nation? The only way we can finance it is through donations that come in from existing and new members to enable us to finance, to cash flow an organization which is a lot bigger than most people realize, with more than 50 full-time people working within the organization. So that's quite a large amount to find every month. Yeah,
it is.
And when you've gone through major sabotage events which destroyed your finances, and you still carried on going, and you've got through 2 attempts to jail me, the head guy, the head honcho, when you've got through acres and acres of misinformation on the internet because the establishment don't want your message to spread, and you're still doing it, and what does success look like? Well, you could say survival is success. You could say that getting results in all the recoupments which will happen is success. You could say starting to build out the sovereign nation and financing all the technologies, the energy and the water and the food and the communications and the travel and all those things which I talk about in various places. You could say that starting that is success. You could say waking up in the morning is success. So, like you say, Andy, it's different for everybody.
It's measured in so many different ways, isn't it? It really is.
Yeah.
But how can you have any success in life, however you measure that, if you don't have your freedom?
Well, if you haven't got your health and you haven't got your freedom, then I argue with anybody who wants to argue, what have you got?
Yeah.
If you can't get up in the morning, you have to lie in bed because you're ill and your body's gonna expire soon, then you haven't got much of a lifestyle.
No.
If you have got a health, you've got some good health, but you can't do anything because you're being controlled and constrained on every single level, at every single level, then what's the point of being alive? That's freedom, yeah?
Yeah.
To me, there's only 2 things that really count, your health and your freedom.
Yeah. Yeah. And they are part and parcel of the freedom plan, which is what we're building. So to me, the bigger picture here and success for me is being a part of that, being a part of being able to build out that infrastructure, working alongside you and the others in the organization to see that as a reality. For me, for my family, for everybody else, that's what I would say is success. And I can't wait for us to stop talking about recoupment.
Yeah,
and for us to be talking about healthy water, healthy food, free energy, travel. They're the things that excite me.
And of course, it's not for everyone. And, I've never believed it was for everybody. No. I'm the guy who broke out the cave. And I already knew that if I went back in the cave and shouted out, hey, guys, come over with me and have a look outside the cave, I already knew that the majority wouldn't want to do that because they're comfortable in the cave. But there are some that will come out the cave and they will join the sovereign nation, and they won't be afraid of what they don't know. They'll actually embrace what they don't know because it's a discovery, it's an adventure. And that's what Republic of Old Souls is going to enable people to discover and experience things that they don't already know today. And they can experience technologies that are all out there that they didn't know were out there. And they're going to have a lifestyle which is completely different from yesterday's lifestyle. Tomorrow's lifestyle is going to be a lot different. And some people are afraid of that. And if they're afraid of it, then they're not going to come into our organization and probably enjoy it. But those who like to look at the world in a different way and who want to be part of something which is going to be very liberating and only a tiny percentage of people are going to do it. If you're in that mindset, in that sort of exclusive club of people that want freedom and are actually doing something to get it, as opposed to marching up and down the street with a banner saying, I don't like it, I don't like it, I don't like it, which doesn't achieve anything. If you actually want to make a proactive decision to join in with a group that's got a plan, then you're in the right place.
I think on that note, Ian, I can't think of a better way to end our discussion today. So that brings us to an end to our Q&A for last Saturday's webinar. Hopefully that's helped bring some clarity to the questions that you put down on the webinar itself. As always, keep posting your questions on the weekly webinar registration page, and they get collated and we'll cover them weekly together. We'll continue to cover those in future sessions. So for now, guys, appreciate you being here. Have a great day, and we will see you all on the next one. Bye for now.
Bye for now.